Afternoon, everyone. This is Jack Thrush. I'm the Accounts Director here at Navigator. Thanks for joining this Navigator customer webinar. Today's webinar will be focused on sales tax compliance, and we pulled in our partners at Avalara, which they are experts in that area. A bit of housekeeping first to eliminate on any background noises and echoes. We have placed everyone on mute. And if you have any questions throughout the presentation, please utilize the questions area on your GoToWebinar. It should be on your upper right-hand screen, the little pop-out window. There's one that says questions, and just expand it, and then you can type in any questions. At the end of the session, we'll answer as many of those questions as we can, following up on ones that we don't get to. Now I'm going to turn it over to Maria Tringali, who will give you an introduction to the solution. Thanks so much for joining.
Wonderful. Thanks, Jack. Delighted to be here. I love working with Navigator and SAP V1 and ByDesign customers. So let's dive right into sales tax compliance. I know it's not everybody's favorite subject, but it's actually mine. So just a little bit about myself. I'm actually a solutions consultant here at Avalara, and what that means is I work with our customers and our salespeople and our partners like Navigator to put together a solution for compliance from end to end. And I specialize in the businesses that don't charge a whole lot of actual retail tax, although I know a lot about that as well. But there's a lot of compliance outside of that, and we're going to be talking about that today. So delighted to be here. Our agenda for our next 20 minutes or so is to go through some of the things that have happened during the COVID-19 period and the effect that it's had on manufacturers and distributors, and B2B and B2C sales, some of the things that we're seeing. Also, we have just been presenting our 2021 end of year updates. We have some great webinars out there if you look at our website on sort of what we've seen in 2021 and what you can expect for 2022. So I've got a little sort of snippet of that for you today. And then I, of course, want to dive into my favorite subject, which are all these laws that now affect us that didn't years ago, the Wayfair laws, economic nexus laws, and marketplace laws. And then, of course, we're going to talk at the end how you can streamline all of your tax compliance through automation. So with that, let's kind of dive in. Before I just kind of dive into the COVID-19, as you think about compliance, one thing I want you to think about today is tax compliance in your business touches a lot of people. So you've got somebody keeping some tax rates in your ERP, you've got somebody collecting those exemption certificates and looking at them and storing them somewhere. You've got the website people that are keeping up products and services and the shopping cart on the website. You've got someone filing your sales tax returns, hopefully, whether it's you or a partner. You've got your salespeople out there in the field trying to figure out who's exempt. You've got purchases that might be exempt. So there's a lot of people across an organization. So keep that in your mind as we talk about this today. Sales tax compliance does not belong to one person at a company. It belongs to a group of people. It touches a lot of departments and a lot of systems. So if you keep that in mind today as we talk about what we're seeing and how your company needs to get compliant and kind of get up to today's standards and requirements and frankly laws. It's not just one person. You cannot hire a person to fix this. It's across your organization. So over the last couple of years with COVID-19, obviously before we had this pandemic and we were all at home, we were able to do a lot more in-person sales, and we did generally a little bit less B2C sales. Some people were already very strong in B2C, but as a rule, most manufacturers, distributors, and businesses like yours weren't doing a whole lot of B2C. So we've changed, we've really changed, and we're now forced to improve our B2C presence and improve our online B2B presence. We're accelerating both of those. We might be going direct to consumer with something we didn't before. We have fewer resources in our organization. We have fewer salespeople out in the field. So we've got to change the way we're doing business. I'm on calls every week. I'm probably on at least 2 a day, so probably 10 plus calls a week with businesses, and everybody is doing something with a web presence, whether it's growing B2C, growing B2B, adding a B2B place location where the B2B customers can go and order more stuff online instead of always calling them, all sorts of things. So everybody's got this type of activity going on. So we're seeing that more and more sales are going digital. We're seeing that also our research shows that our B2B buyer, our customer, wants to buy more online. They want to reduce having to pick up the phone and call you or fax you or fill out a form or call their salesperson. They want to be able to click to buy. They're buying the same things over and over and over. They do not want to have to call their sales rep. They want to use you as a vendor, and they want that to be easy. They want to, and we want to skip the middleman. They want to go direct to you. They don't want to be paying upcharges. And they want increased e-commerce. So we're seeing both B2C and B2B. They want to be able to buy online seamlessly and make that easy. And the sellers who make that easy for the buyers are the ones who are going to be ahead of the game. And all of these things that we're talking about, they trigger tax obligations. We have to figure out how we're going to handle our tax obligations in all these different channels of sales. And we can't expect our staff to understand this. And this is where, of course, automation and good partnership comes in. So looking at 2021, you probably already know this because we hear this in the news every day, but on wholesale distribution, competition has increased greatly. There's new disruptors, there's global dynamics, there's a global supply chain now we have to think about. There's our social changes, and employees wanted to work from home, travel less, not go out, not go on site, or maybe not even available. And then of course, there's lots of regulatory requirements. So what does an online seller have to think about? The first thing you need to think about, or actually just a seller, not necessarily an online seller, but just a seller, we have to think about all these new nexus laws. So if you're not familiar, the economic nexus laws and marketplace laws were passed almost 4 years ago now, or past 3.5 years ago, that these laws were passed in states. So we have to understand how those new laws have affected our business. If there's another thing you remember from me today, if you have not done a nexus study or a sales tax risk assessment of your business to understand where your business might be hitting some of these thresholds in these states, promise me you'll do that with Avalara or with a CPA partner that has a state and local tax practice, and understand where your business has an obligation to get registered, because they were laws that were passed. The next thing you have to worry about if you sell to a lot of businesses who want to be exempt is those darned exemption certificates. It used to be relatively easy to collect them from the customers in your home state. You knew what they looked like, you knew your customer, you put them in a file, boom, we're done, right? That's not the way it works anymore. You can't be in the paper world anymore, right? We're in a remote society. We cannot be collecting paper. We have to know what we're looking at. If we have nexus in 17 states, 25 states, we have to know what forms we're looking at and make sure that those are current and accurate, and we have to keep this up to date. We also have to worry about taxability. Product taxability varies from state to state. So we have to know how our products and services are taxed in our home state and in other states, especially if you sell something like services. Anything that's intangible varies greatly in taxability. Tangible products, pieces, parts, those are pretty much the regular tax rate, although the tax rates vary from state to state, but taxability for a lot of things, installation, warranties, that can vary from state to state. And we have to not forget, this is what I'm most passionate about, is the customer experience. As I mentioned already, we need to make sure that we do not forget about the customer experience. If you get an invoice right, that is a good customer experience. If you do not get that invoice right, if your taxability isn't right, if you charge them tax when they shouldn't be charged tax, if you have to do credits and rebills, that is a poor customer experience. That translates as, you can't even bill me properly, I'm gonna go use your competition, or it's really frustrating to work with you. And tax compliance is a big part of that customer experience because it's part of invoicing properly. So don't forget, and we wanna make it easier for our customers to buy from us, not harder. So those laws that I mentioned earlier that were passed a couple of years ago, let's talk a little bit about those laws. And if you might be slightly familiar with these, you might be very familiar if you've already registered your business in new states. But what happened was in June of 2018, the Supreme Court decided that states could now actually require businesses to remit tax to them for goods being shipped into their state, regardless of whether or not you had a physical presence there. It used to be just basically physical presence of some sort. And then the Supreme Court said, no, with our new internet world, it is okay for a state to require an out-of-state business to collect and remit sales tax to them because the goods are being shipped into their states, into their constituents, and used in that state. So they want a cut of that business, regardless of whether you have a presence. So some of you may have looked into this for your business, some may not. This was touted by the press originally as a e-commerce laws, and so many businesses think that it only applied to businesses that were e-commerce sellers, B2C e-commerce sellers. That is not true at all. These laws apply to anything being sent into any other state. If you have large equipment or small items, it is based on how you're going to market in that state and how much revenue you are sending into that state. It has nothing to do with being an online seller. If you're shipping it into that state, it counts. So again, if you have not looked into this for your business, it behooves you to be a good steward of your business and understand how these laws have affected you. And unfortunately for us, the laws are different at every state. There's also marketplace sellers. Marketplaces are huge. You probably all are selling something on eBay or on Amazon, and those laws have affected us as well. The states know that these marketplaces are huge and that they're just selling and selling and selling into their state, so they want that marketplace to send them the tax as quickly as possible, because the seller looks like it's Amazon. Even though it's you, it looks like it's Amazon, and they want Amazon to send them their taxes ASAP as soon as that is sold. If you're using something like Fulfillment by Amazon, you still own those products until they get sold. That means you have a presence in that state and you have to pay those taxes. And that tax liability doesn't belong to Amazon. That liability belongs to you. It's you ultimately selling that product. Just because they're remitting it for you, it's still your tax liability, and that has to be reported to the government when you file your returns. This stuff is getting harder and harder, as you can see. So just a quick glance, these economic nexus laws vary by state, as I mentioned. So this little map kind of shows you the difference in the states. I don't know how a business, small to medium-sized business without a tax department is ever supposed to be able to keep up with these things. Of course, the states don't really care if a business, how hard it is for a business to remit it. They just want their money. So it's a very complex territory that we're navigating here. So the amount of dollars for the threshold, as well as what they count, whether it's exempt sales or not exempt sales, retail sales, tax holidays, whatever. Every state has created their own individual laws, and there are 46 taxing jurisdictions in the US. There's only 5 states that do not have sales tax. Those are the gray ones, the grayed out ones there. So it's a lot for any business to keep up on, and that's where automation and good partnership can really come in. And then this question I get almost every day, but most of my sales are exempt, so do I really have to register? Back to my previous slide, every state has different laws. Some states count the exempt sales towards the thresholds, some states don't, some count resale but not manufacturing. Every one is different. So if you meet the requirements in that state, even if everything is exempt and your sales tax return ends up being $0, yes, you still have to register, and yes, you still have to report in and file, just like we do on our personal tax, right, our personal income tax. Even if I don't owe them anything, I still have to file at the end of the year. So yes, you still have to register. Do you still have to remit $0 returns? Yes, absolutely. You need to report all of your earnings, and you need to report that we don't owe you tax because all of these things were exempt. And when you get audited, you need to be able to prove that you had those certificates on file, and that's the reason why you didn't charge tax on those orders. And just a quick reminder, these are laws. I know I've said that already, but they are laws that more businesses need to apply to. They're not guidelines, they're not suggestions. These are laws that the states have passed, and we as businesses need to adhere to them. So now we've got probably a few extra states that we have to register in that we haven't registered in before. Now our business just got really complicated sales tax wise. So now I've got this frontline employee that's trying to collect exemption certificates from customers who've been buying from me tax exempt because I didn't have Nexus there, tax exempt for years. And now I'm interrupting that sales process and I'm asking them for documentation in order that I don't charge them tax. That's an interruption in business. And then your employees don't know what they're looking at. They don't know what the resale certificate looks like in Wisconsin or wherever. They don't know what they're collecting. So we've got to give our employees a break and help them know what they should collect and when they should collect it, and whether or not it has an expiration date to it and whether it needs to be renewed. A single missing certificate in an audit is worth a lot of money. If you sold $50,000 to a customer and you can't prove that you had that documentation on file and the date of that sale, you out of your pocket owe that tax to the government, regardless of whether you've collected it. These are extremely valuable documents to your business. Getting a tax rate wrong by 0.5%, that's pennies. Missing certificates, thousands and thousands of dollars, plus fines and penalties as well. So kind of in general, being a good steward of managing your sales tax compliance, there's sort of 5 steps to it. You need to know where you need to collect and remit. That's what we've been talking about. Then we need to get registered. If we owe them back taxes, we need to come clean before we can register with them. Then moving forward, we've got to be able to calculate the right amount of tax or track and manage those exempt sales, collect those certificates and know where I should be charging tax to who and where I'm not charging tax to. And then of course, adding states is going to increase that responsibility of filing those returns. You may have been filing just in 2 states, just talking to a business this morning. They're in Illinois and Wisconsin. They're like, that's fine. We know how to do that. We've got those 2 returns down. But they likely have exposure in at least a dozen or more states. They have less familiarity with those forms, the timing, the requirements for those states. It's going to magnify the responsibility of the staff to do those filings. Even if they're only once a year, even if it's minimal owed and they give you an annual filing, you still have to report in, and it's still hard. Then, of course, if you are charging tax, you have to worry about all those gosh darn taxing jurisdictions, which, as we all know, is not equal to zip codes. Zip codes were invented for the US mail. Government, this is an example on my screen, the government does not care what the zip code boundaries are when it comes to taxing. So the taxing jurisdictions are all different rates all over the place across zip codes, across states, counties, jurisdictions. It's crazy. And then, as I mentioned earlier, as you're adding new states, you have to understand how your products and services might be taxed in those states. Installation with a warranty may be taxed differently in one state than it is in another. Use tax rates could be different. Everything just varies. As I said, anything intangible like services, like training, you charge for those. Those can be taxed differently from state to state or from jurisdiction to jurisdiction. So you have to understand your product taxability for those customers that are taxable, especially in addition to just knowing what the tax rates are. And then there's crazy things like tax holidays and things like that that you also want to take into consideration. There are a lot of rules. There's over 1,800 different rules across the United States. And so I don't know how any small business is really going to be able to keep up with those without automation. And then there's everyone's favorite or least favorite, consumer use tax. So if you have consumer use tax in your business or use tax in your business, if you buy things tax exempt and remit when you install something, or if you build that cabinet, but then when you install it, it becomes real property that we have to remit use tax on that. Whatever your particular scenario is, if you have to remit use tax, now we perhaps have more states where we have to understand the use tax laws, and they are not easy. You think sales tax laws are hard? When I learned more about use tax, I just almost roll my eyes every time. It's very, very difficult to manage, and automation can be super helpful. But it's really, really easy to make mistakes in use tax. A lot of businesses just kind of flat estimate it because it's really hard to do. You can have, and it's a low-hanging fruit for auditors because they know it's very hard. You have to determine how that product was used. The reason why it's hard is because it's based on how the product was used after the purchase. So we have to track the purchase, how was it purchased, what tax, if any, was charged then, and then how did we use that item and where do we use that item, and how do we apply tax when we actually went to use it. It is a post-purchase process and it's a subjective, where charging retail sales tax is kind of a repetitive reactive activity. Use tax is a subjective sort of activity after the purchase. So it gets really complicated, and automation and actually research tools can help you understand this. In most cases, when businesses improve their use tax efforts, they end up saving money. Most people are overpaying because it's just hard. You'll save So I've had some companies save millions of dollars by focusing on doing a better job of use tax. So automation, real quick, let's run through that and then see if we have any questions. So let's talk about what automation can look like for your business. And again, I work in the business of people who don't charge a lot of retail sales tax. I've been here almost 8 years, and this is what we've kind of developed as our most effective resources and assistance that your business can do to improve tax compliance and take that guesswork off your staff. The first thing is move to intelligent exemption certificate management. We can no longer be in the paper and PDF business. We have to make sure we are collecting the right document for the right reason. It is valid. We're tracking it. We're renewing it. We have to get out of the paper business. I don't know why. We're still in the paper business for exemption certificates. We've got to get that automated. So invest in intelligent compliance management. And this is not, I'm not sure I have a slide today, but I want to call out, this is not doc management. This is not document management. Document management is putting an image of a document in a system and maybe attaching one data point to it. Not document management. That is outdated. You need intelligent compliance management. Does a customer know what to fill out? Are they giving me the right thing? Does it have the right data on it? What is the reason why? Is it the right form? What is the expiration? What does that state accept? Does this state accept this other state's exemption certificate? You've got to have more intelligence in this exemption certificate management process. As I talked about, these things are extremely valuable. And then in our tax compliance suite, so the way this works is, let me pull up another screen. So it starts with your customers. So the first thing you need to do to get compliant is tell the system this list of customers that you have and who wants to be exempt. We get that list of customers into the software, into our what we call our cert capture software. We get the list of that customers into the system, and then we upload all of those documents, or we just go out and electronically collect new certificates. Again, we want to move out of the paper business. So cert capture has the capability of sending, we have a little portal where your customers, maybe some of you have seen this, if you purchase something, you might have gotten a request from a business that uses cert capture, and you've been able to complete these forms online. So we have to get somehow either copies of what you have already or new information into this system. That's job number one. Once we've done that, then we can look at tax determination. So cert capture and Avatax, so your exemption certificate platform and your tax calculation engine need to be connected, so that when your ERP, your system here, your SAP B1, your ByDesign, when it makes that tax determination call, so what we do is we replace the field for tax with the word Avatax, and that's an API call. So every time you create a quote or an invoice, your system is going to automatically make a tax call out to me, a tax determination call. And the first thing it's going to do is say, where's this going? What's the address? And we validate the address and we return a valid address back to you. The second thing it says is, do you have Nexus here? Yep, we've told the system we have Nexus in that state. Third thing it does is that customer exempt or not? Yep, they're exempt, so I'm just going to return a $0 back if I find a certificate. If they're not exempt, I'm going to calculate the right amount of tax for every line item on that order for that specific location and return the total tax amount back to you. So you never have to think about any of those things. And then because all of your data are flowing through to Avalara, we take all of that sales data and the software, not humans, the software fills out the forms for you. You tell us what states you're registered in and what returns need to be filed. The software fills out those forms. Then you go and review the forms, and then we'll remit them on your behalf. So that's what end-to-end compliance looks like for our common SAP customer. You're going to take into account use tax, as we talked about. You're going to import that in the process, and so that we can also reflect that on the returns. And then I talked about tax research. This is my last thing, and then we'll go to questions. So we talked about tax research. Why is tax research important? If you are, so what we've talked about so far is the what, is the tax calculation. That has to be done at the time of invoice. But tax research is the understanding how your products and services are taxed and where they need to be taxed. If you're doing big bids, if you're in the crane business, you're doing big RFPs, how do you know how the products and services you're provided are taxed at this particular location where you're going to do that job when you have to submit a bid? Is really important, especially as you expand into new states, that you understand the taxability, the why behind the what you sell. What is the taxability? How do I tax this? Where is it taxed? How does each state treat the treatment of this thing? So investing in a powerful research tool that has answers at your fingertips is incredibly valuable if you're in that. If you're not just selling widgets or pipes or parts, invest in a powerful research tool that has answers, lots of answers. When you have those questions, it's a Google and Wikipedia about how and where things are taxed, what exemption certificate applies to what state, how do I handle drop shipping on this order? So you've got this tool at your fingertips to answer all of these tax compliance questions. So with that, Jack, I'm gonna kind of see if we have any questions. I can't see the screen, so I'm gonna see if we have any questions coming in from
Thank
the
you,
audience.
Maria. It's
Yeah.
Sean. I'll jump in here for Jack.
Oh, hey, Sean.
He's still on the line. Again, we have a couple of questions. If anyone else has a question, please just pop it in the question box on the controller for the webinar, and we'll get to it. Just real quick, a couple of them that have already popped up. Someone's asking, they have hundreds of exempt certificates. Some are in PDF, some are on paper. How are those all put into the system?
Good question. We have a fantastic team. I didn't really talk about this, so I'm glad that you brought it up. So we have a fantastic team here. We call them our Capture Managed Services folks. So what we do is whatever you need us to do. So we have a team of people. You can send us a box of those if you want, or you can send us PDFs. But remember when you uploaded that list of customers that I talked about? So we'll go and look at the documents that you have if you want us to and see if they're current and valid. And if they are, we're going to go key that data into the system. Remember, we want to get you out of the paper world. We're going to key the data into the system and we're going to attach it to that customer. If you don't have what you need or what you have is expired, or you want to save all that paper and just have us go collect new for everybody, if you want to save that for audit backup, we can do that too. And so then we'll go and collect anything that's needed or all of it electronically, and that will be in the system. We look at them, we make sure they're current and valid, and my favorite part, we answer all their questions. When we run a campaign on your behalf, we answer any questions that they have. We get those set up in the system for you so that that tax determination works properly. So we will definitely support you. I don't expect you to have to pour through all the pieces of paper that you have and know whether that's the right form for the right reason in that state, whether it's still valid. I don't know how you could know that. We have a team of people that will get you from current state to future state.
Oh, excellent. And then let's see, another one being, is there a separate connector for a shopping cart, or is it all done through the B1 ByDesign ERP interface?
Great question. I didn't cover that one either. So this is a good question. So in my little slide that showed your systems in the middle, it said Avatax in the systems. So yeah, so you will connect everywhere where you create invoices, you'll connect with Avatax. So we're the sort of core for your tax compliance, and whatever platforms you use, you connect those in. So if I'm in my shopping cart, if I'm using Magento or whatever, then you connect Magento to Avatax. If I'm creating invoices in SAP, then I connect SAP. If I'm creating invoices in a Sage system or something else, some other quoting system, yes, I connect all of those in. It does all the tax calculation, and then all the sales data, of course, is here so we can file those returns. So yep, everywhere. And if you change, if you upgrade or change, let's say you move from SAP to ByDesign or what have you, you just swap over because all your tax compliance is here in the cloud. So it's really easy to plug in and unplug your different invoicing systems. Great question.
A little bit more specific question, does Avalara process tonnage tax returns?
Tonnage? So that's a special, that's a special tax. We may or may not. I'd actually have to get back to you on that. So good question.
So we'll mark that as a follow-up.
Yes, please.
Jack, I'll mark that as a follow-up for you as well. We don't collect sales tax, but we have to collect tonnage tax from our customers that are not exempt. Tonnage tax varies by state and sometimes county. So yeah, it looks like we're gonna have to do some research on it.
Look into that for you. Yep, we'll ask the returns team for you. Yep.
Let's see. Does Avalara cover compliance for membership organizations that have e-learning courses and on-demand webinars?
Absolutely. Anything you sell, pretty much. Anything you sell, absolutely we do, you bet. So that's a service, that's an intangible. So right, that's what we talked about. That can be taxed differently in different states because no one agrees on those intangibles. So yes, absolutely we can do that.
Let's see. Are Avalara integrations to Business One and ByDesign certified by SAP? Right, they want to make sure it all works.
Absolutely, yes.
And then
All of ours
how
are.
long does a typical Avalara implementation take?
Oh, these are fun questions. So it depends on you. So I would say just off the top of my head, on average, maybe 60 to 90 days. Depends on, whether we can get the clean list of data into CertCapture. We can start a campaign out to those folks about 30 days after after you sign on with us and get your customers in and get the software set up. So while we're going out and collecting those certificates on your behalf or validating the ones that you have, you're going to be over here working with your partner like Navigator to plug in that integration that we're talking about, get your settings right. And then hopefully in about 90 days, we meet together, right? We've got our certificates in the system. We've got AvaTax plugged into your SAP system. We've got our return set up, and away we go. So 60 to 90 days is a good time frame.
Got it.
To
Yeah.
plan on.
And we've all been through an ERP implementation, so we know it. There's a range, right?
There's a range, it really depends on what else you're doing. If you're also upgrading at the same time or changing systems, of course, it might take longer because there's more decisions to make. So as I said, it depends on you, the customer, kind of what your timing and resources are. But we can get started right away. So.
Yeah. Happy to do so. Let's see. I've got one if there are no other questions. Of course, another big one that follows up on implementation time. What is the pricing model for Avalara?
Oh, okay, good question. So pricing, everything with Avalara is essentially based on usage and volume. So remember my little slide with the 3 pillars. So each time you make a tax determination call out to me and I do something with it, I check the address, check to see if you have Nexus right, I do all those things. That's what we call it, a get tax or tax determination call. So we charge by final invoice. So we're going to do the, get tax or do the tax determination along the way as you do update your quotes. And then we're going to charge you at that final invoice. So the number of invoices that you process, the number of exemption certificates that you have on file with us, and the number of sales tax returns that we file on your behalf. So it's all volume based. So different for every customer.
Excellent. And those are the ones I had that were active. Are there any other questions out there while we have Maria on video? We can certainly follow up with any question. I know Jack and Kevin will be reaching out to everyone to make sure they got the information they needed. If there are additional information requests and needs, we will certainly coordinate the right meetings with Avalara and the Navigator account manager. So
absolutely, we're happy to get on a call and talk through your individual scenario and think about, what pieces and parts of what we've talked about today might be appropriate. If you're 100% exempt, perhaps you don't need the SAP integration. Maybe you just want to do a really good job of managing those exemption certificates. That's fine, right? And you want us to file your returns. So you don't have to do everything. There's lots of options. Or maybe you just need that tax research tool. Maybe you do project billing and you just need to really understand the taxability and how to bill your customers. So you don't have to do everything. So let one of our professionals meet with you, talk through your particular scenario, and put together a custom solution for you.
That's excellent. Well, with that, Maria, I want to say thank you very much from Navigator for our clients. I really appreciate you taking the time today to walk us through it, and
my pleasure.
Have a fabulous afternoon.
All right, thanks, Sean and Jack. Bye, everyone.